Thank you for joining iMeet. When you hear the tone, you will be the 29th person to join the meeting. This meeting is now being recorded.
Write them down if you, write them down when the questions come in, okay? Here. Just write a symbol down or something. Grab it. Hey everybody, good afternoon. This is David Blake with the Tuesday Tech Talk. Apologize again for my cough. It's still sticking around. So anyway, what we're going to try to do today is look at go over the indexes, take a look at some of the sectors. We're also going to look at something called sector rotation that Sam Stovall from used to be the chief market strategist at S&P. Came up with a couple of tables to look at to kind of determine where we are in the bull market here, whether we're near a bottom or whatever, or in full throes of that. So, we're heading into the last few weeks of the year with positive momentum in the market, obviously. Here's the Dow real quickly here. But, seasonally, this is a strong period. We have the Santa Claus rally that we seem to be in right now. What I want to try to do is I don't really see any reason to be out here trying to look for stocks to sell. I'm not a big aggressive buyer over this next week or two because it's a little bit, we've had such a big run right now. But we'll look over some different stocks that y'all have emailed in. And what we're trying to do is, Kramer has his lightning round. We'll try to start out here with something called hold 'em or fold 'em. All right, first we're going to look at the Dow. You can see this, how overextended it is. It's still, basically around this time of, in the markets like this, where we're hoping to see some kind of negative divergences, that type of thing, or maybe in the different indicators, or what, just what we should be doing over here when you have almost a parabolic move like this. And on this chart, quite frankly, there's not a lot to not like here. You have you don't have any negative divergence over here. Basically, what you have though is you're extended and you're overbought, but a market can stay overbought for quite a while, even months. As you can see over here, it's been since basically October. It's been overbought. So we'll kind of look at some different charts here to see what other indexes are overbought. Right now, the CTI is still a -3. Someone emailed me and said, I guess that thing doesn't work anymore. But we've had a pullback a little bit in the Nasdaq. We had a little bit of a pullback in the Russell 2000 and utilities. So momentum has slowed down a little bit. The Dow Jones is almost like the new Bitcoin. It just keeps rolling. So no reason to sell that. But momentum index even improved last week. We went from a -6 to a neutral -3. That means the Dow Jones is, still outperforming other indexes, but some of them are starting to catch up a little bit. Sentiment was a negative -2. That means there's still a little bit too much bullishness and complacency out there. The percentage of bulls, again, is up in the 60s, and the difference between the bulls and bears is back up around 50, which is, last time it was up there was in 87. So that's, just this. When sentiment gets that bullish, you still have to be a little bit cautious. Not a lot of red flags out there though, so I'm not looking to sell everything because I'm worried about stuff. But anything could happen here. We have the FOMC meeting started today. They'll have their announcement tomorrow. I wouldn't expect to see any bumps due to that. We have Janet Yellen getting ready to pass the baton to a new Fed chair. That's she's not going to do anything to get aggressive here as she's out the door. That's going to rattle the stock market, and then the new person isn't going to come in and do anything to rattle stocks either. They don't. She wants to go out on a high note, so not worried about that. The next slide over here is the NYSE advanced decline line. We're actually making new highs over here again. That's supportive of higher prices on the Dow. Little bit of divergence here from last week when we had the You know, that one day where we were down 150 points or something like that, 200 points. But we're starting to see some expansion again over the last day or so. Want to keep an eye on this. Today, the Dow's up triple digits, 140 points. We have about 101 new highs again. So, you know, we're not, you'd like to see this thing where you're breaking up the new highs up here around the 200 level. So that's a little bit, meaning that there's a fewer and fewer stocks are kicking out the new highs, but it's still positive. Here's the S&P 500. Again, here's the little channel that was working up, bouncing on that upper line, started to come back to it, and then almost a parabolic move on that again. Again, we don't really see any negative divergence on that. We're just extended and overbought. So, you know, the risk, market risk is, you know, maybe geopolitical more than anything. But this indicates that we can go sideways to higher from right here. Here's the NASDAQ. Pardon me. The NASDAQ, it has a nice upward channel going in here. We worked a little bit of the overbought condition on the market back here about 2 weeks ago. Starting to pick up a little bit again on momentum in here. We're positive today, but you know, the Dow is up 142 points. The NASDAQ's only up 7 points. So, you know, even over the last week, the Dow's up 1.5% compared to less than 0.5% on the NASDAQ. So, well, no, I take that back. Over the last 5 days, the NASDAQ is it's coming close to the Dow. But again, you know, momentum is starting to pick up. I think you can get back up here and test this upper channel on the NASDAQ. Now, one thing we do have on here, this is the first little indication that it's not quite as strong as we think. When you have something like an advanced decline line, you can also draw in trend lines, that type of thing, on these type of charts also. In this case, we're seeing a lower high. We want to see if we have a couple of days of sideways action, if this chart would make a lower low. That would be a red flag, and in fact, if I see that, I will probably mention that in my daily commentary, that would be something that you know, would bother me quite a bit. But as of right now, as long as we sit around here, and especially if we take out this high and go higher, means the NASDAQ's probably going to, you know, keep on trending a little bit higher. Again, just like the New York, well, this got a little bit worse last week. We actually had a day where we made more new lows and new highs, but we're coming back around on that. Not expanding very much. Today we have 78 new highs versus 28 new lows. So, you know, it's going to actually tick down a little bit from here. You'd like to see this expanding like this when you're getting ready to push out the new highs. You don't want to be pushing out the new highs and see this thing way down here. That means you have a few stocks, you know, whether it's the FANG or whatever, that were you know, moving us to higher highs. All right, now this is the first chart we're going to look at that is a little bit concerning. This is the Russell 2000 Small Cap Index, which should be one of the biggest benefactors of tax cuts and that type of thing. We had this little pullback down below the 50-day moving average, and it turned on a dime, and again went parabolic over in here. This is, I guess, with the tax talks got going. Now we've punched out to a new high, not confirmed by the 14-day RSI or the MACD. I put in here, remember we've talked a lot of times about on the 14-day RSI. On an uptrend, it'll stay above 40. If it breaks below 40, that's going to be a signal that this is probably, you know, this could get worse. Now in this case here, we came down to 30 twice, but once, you know, when it made this run here, if this would have only gotten up to about 60, that would have been concerning, which would have meant that the downtrend was still in place. But once we got up above 65 or so and went it back into the 70s, that meant that you were, even though we were overbought, that meant you're back into a bullish trend. We came right down to the 40 level in this last sideways lower action here, and now we're back up to 70. So this is telling me, despite the negative divergence, you know, we're still in an uptrend on this. Now, Connie Brown was the technician who discovered this, going back and back testing this, where, you know, when you had the 14-day going below 40, that it usually a lot of times it kicked in. It was the start of more of a bearish movement in the thing. So we want to see if this thing, what's going to happen on this. This negative divergence doesn't mean you go out and sell the small caps, but what it does mean is we need to see this thing, you know, break back above 70 if this thing is going to make a new high. If it doesn't, that would be further indication that maybe we're getting close to a short-term top. Here's the transports broken out to another new high over here. We came down, tested almost tested the 200-day. We got below the 50 and the 100-day. Came back above that in this parabolic move on tax reform, and I don't see the negative divergence on that. Again, we started to see a roll over here down to the 200. We broke below 40. It stayed there for a while over here. You're still in question whether this is going to bounce back or not. When we got back above 65, 70, that meant that the uptrend was still intact, and we're going to watch that. Even the accumulation picked up on that. So nothing really to worry too much on this. We're down about 8 points today, so momentum has definitely slowed. But at this stage, nothing really to worry about on the transports too much. All right, this is one that does bother me a little bit. And I see the questions coming in. That's good. We've got about 10, 15 stocks to go over today. Now, this is the semiconductor index. Even though the technology sector is still one of the best performing, this is one we want to keep an eye on. It broke below the 50-day moving average about 7 days ago. We're down 0.5% today to about 1239. You can follow that in the Wall Street Journal or Yahoo or whatever. Well, you want to keep an eye on this 1220 on the semiconductors. If this closes below 1220, that's going to be a red flag that you're going to at least go down here and test this 100-day moving average. So far, you're bouncing along 40 on the 14-day RSI. If it goes back down below this thing, that's going to be a red flag that maybe we probably will go down and test this 100-day and maybe this lower channel line over here. So again, also the fact that the 30-day stochastic was able to go below 20 concerns me. If this goes back below 20, which it probably will if we're down 0.5% today, is one to keep an eye on. I do see the momentum in the semiconductors when you look at even the NVIDIA and that kind of stuff has really slowed down. However, there's other areas of the technology sector that are still outperforming. That's why when you look at XLK, we're up. So the next slide here is something that before we get into these questions of the individual stocks, over the last 1 week, including today, technology continues to lead. It's up 2.5% despite this in the semiconductors. So whether it's your networking stocks or software, whatever, some parts of technology are still outperforming. Healthcare looks good in here. That was a little bit of a bounce in biotech. I think that was up, that successfully held that 300 level on the IBB. Industrials are looking good. They're looking good again today with Boeing having a big jump today. It's up about 2.5% as they announced another share buyback and raised their dividend. Utilities have a pretty good week, and so is energy. On the downside, the only thing that's really flat to down was the consumer staples XLP. Okay, before we get to the questions, what I wanted to do with this is the chart that Sam Stovall developed for S&P several years ago, and what we have here is the green bar marks a typical business cycle. Here the business cycle slows down, you get into a little bit of a recession, you start to come out of the recession, and then you just get toppy over here, and it starts to roll over. And so the way it works from top to bottom, and one of the things that over the last say 8 or 9 years, when all the global central banks did anything they could to prop up stock markets and prevent any kind of slowing, they messed the business cycle up. So it hasn't been something that has been easy to follow. But I do think now we're kind of getting back into place. And what I want to try to do is see if we can find on this chart, as you can see over here, the stock market peaks ahead of the peak in the actual business cycle. So it runs ahead of us and lets you know where we're going to be. But when they talk about the Fed talks about normalizing rates at these FOMC meetings, their hope when they normalize that it's also going to help to normalize the business cycle, and that way we can experience these more ups and downs, and it'll actually help you to instead of just what you buy, they're going to prop it up. It'll help you to rotate out of some of your different holding positions and go into positions that probably have underperformed, but now they're ready to move. So moving from a market top to a market bottom, Over here we have, usually at the top, energy's outperforming, then consumer staples, healthcare, utilities, finance. As you start falling into, slowing down, you have the consumer, cycles are starting to, we're starting to go into a slowdown. You have the consumer discretionary, technology, industrials, basic materials, and energy. Okay, so this has worked fairly well in the past. It's something that you probably could go back and copy this and just keep next to your desk, and just to kind of see every once in a while where we might be in the cycles. Now this is something right here. This is a line chart of the different sectors, so you can see what is outperforming right now. And over here we have, technology is up about, this is over the last 200 days. This is kind of tough to see, up 12.5%, 13%. The next one is materials. Then we have financials, and it goes on here. But you can see what's going on down here at the bottom. We have energy, and we have consumer staples. To make it a little easier to read, this is called a perf chart, and this is it's a little easier to follow. Again, it's over the last 200 days, and you can see that technology has been the best performing sector. And then we go with these. We have industrials, materials. Here's the financials. Though they're all strong, they probably have more upside. If this is going to start to come down, these will be the sectors that should begin to outperform when we look where we are in the market cycle. Now we go back here because we look at the technicals, industrials, and materials. Here's financials over here. That's because the rates are going up. I would say we're probably, because these are the ones that are outperforming, technology has pulled back a little bit. We're probably right here, which means, which suggests to me that we're still we should have a pretty good year coming up here, and that we're still in the middle of what I believe is our still the bull market. When we get over here and we start to see energy and consumer staples and healthcare, which are underperforming right now, so that's down the block. So we know we're not over here at a market top yet. When those start to outperform on this over here, that's when this flips over. That's when we know we're looking at probably a market top, and that's when we want to start looking, maybe to pick up some of the early cycle stocks. Okay. Last thing, and we're certainly not there where we're seeing energy and all that stuff outperforming. I mean, obviously, our energy's down still about 12% for the year. It's starting to pick up as all the different sectors are. But this perf chart is how they are, basically against the S&P and each other. So again, when you look at this, what's outperforming, I have us right about in here, which is we're in not early recovery. I think we're in the business cycle, we're moving up. Rates are moving up a little bit. All the economic data we get is improving every time. So we're recovering, and we're going to be, it's accelerating if anything. So to me, we're like right here. And that's which means to me, I wouldn't be worried about selling a lot of stuff or going to cash, and we're looking for about 20% pullback. When we get over here, where we have these beginning to outperform, then we can start looking about, thinking about, okay, we're probably at the market top. We're probably going to start heading lower at that stage. But right now, again, I think we're right here. So, two other charts I want to look at before we start looking at the different stocks. This is crude oil. We are moving a little bit higher on here. I told you I think we probably top out around 60. Nothing not to like, that you're still under good accumulation. This actually kind of surprised me a little bit. A little bit of negative divergence over here as we made this second high up here. The 14-day RSI was got overbought, but didn't quite name it. Now we're moving up a little bit over here again. But we want to see this 14-day get back above the, back above this 70 area. One other, again, I think probably up around 60, maybe 61, 62 area is where I think we're going to top out on crude. So I would recommend still holding on to your oil stocks that we hopefully we got into back here last August when we had that broke that uptrend, and we've been moving up pretty good ever since. So last one here, this is the U.S. dollar, the UUP ETF. which we look at every once in a while. This is these lines here are the Fibonacci, going back to where we were in the spring to where the dollar is now. We came down here and tested this $24 range. Actually, it overshot it to the downside. We've worked our way back up. Right now, with as we go into this FOMC meeting, with we're expected to raise at least at least a quarter of a point. You're starting to see this pick up. I don't see this really, going all the way back here, mainly because the other global economies are also improving, which is that they were all slow and we were getting going, just gangbusters. Then you'd probably see this thing break out to here. But as long as globally we're going to all recover together, this should be a slow, easy move sideways to maybe up a little bit. Even if it gets to the 50%, we're only looking at under 25 on that ETF, which is where we would be, from back in the July area. So again, on this little move over here, we're holding above 40. Dipped down a little bit on that bottom, but now we're back above it, and we're at 59.60. We want to see this thing get up to around 60, over 65 and 70. Not strong accumulation. This also tells me that we're not going to see the dollar break out against the euro or the yen, that type of thing. So, and why this is important: if this thing moves up, it's good for financials. If it gets too heavy, it's bad for commodities. So, a strong dollar will weaken commodities. As long as this thing stays in this area, the commodities will stay high. Demand stays up and healthy, and that's good for the materials and that type of thing. Okay, so now what we're going to do, I asked, I didn't have a lot of new stuff to go over, except for the business cycle stuff, which I just threw in this morning. So I think hopefully you got something out of that, where we can, in future webinars, we can look at where we are in the market cycle and the business cycle, and it'll help us to pick out the sectors that we think we should start to be buying into. So we're going to start looking at a couple of different things, stocks in here that came in. That's the CTI again. CTI stays bearish for another week or two, and then we go bullish, and we actually stay bullish on the CTI and stuff. I think in to March. So I'm not looking for. So I know some people are calling for maybe after the first you get a pullback. Then everybody's just looking for a pullback. So I don't think if we do get anything, it'll be more than 2 or 3 or 4%. So anyway, let me close this down here. We're going to try to do the share and go over some of these individual stocks. Screen share. Did you say IND is the Dow Jones is the new Bitcoin, the way it's been trading here lately. We had a couple of these, and one after me. Okay. All right. Again, if you're looking, the rest of the time, we're just going to look at some individual stocks that people came in, and try to go over some of those, see if we hold them or fold them. If you want to put some more up here, just go ahead and put them in. Okay, we're going to go over here. The first one we had was Micron. A lot of chip stocks came in. Micron, what I have on there, we're long on the second opinion. It came back here with the semiconductor pullover and sell-off. We got back above the 50, but we're kind of, it's weak. You're running out of a little bit of momentum. I don't think we're in the midst of a bear market in semiconductors by any means. You have nice accumulation down here, hit the 20 level and bounced off. We want to see this maybe get back above 50. If I was going to buy Micron, I would wait until this thing probably gets up here back around the 44 level. Again, I hold it in here. I wouldn't be, I wouldn't sell it right in here unless we come down here and crack probably below that $40 level. That would probably mean we're in a little bit of trouble. But right now, I think we're around 42.30. I would hold this one. Okay, NVIDIA. This is another hold. You actually came down here to the 100-day. It found good support. Momentum's is weak. This is kind of interesting down here because we just got done talking about when something breaks this 40 level, you want to it should be a little bit of a red flag. However, as soon as it bottomed here and bounced back above that, we got back above 40. So with NVIDIA, I think I'd probably wait unless I'm looking real long term. I may want to wait to see what happens with this 200-day moving average. You're kind of at a crossroads in here when you get between these two, this 1500. You're not sure which way it's going to break. So you may, if it gets above the 50, if you want to get aggressive, you could probably go in there. If it breaks below this 184, that probably means that we're going to be in the throes of a little bit of a 3 or 4% pullback in the broader market. So on the video, I'm holding it in here. I wouldn't sell it until it would break down here. Next one on here we have ATVI. I guess one of the gaming stocks. This is we had a big bounce on here, but I would probably sell this bounce up in here. If we could get up in here, we had a little bit of our relative strength is a 0.93, so you haven't done much since August. You started to roll over. I know there was some of the gaming stocks have had a little bit of a bounce in here going into the holidays. I think I would sell an ATV. I would probably sell the bounce in here, and that's the sell stop on that. I'm not sure what it is on second opinion, but again, this is when I'd probably fold it. Okay, AVGO, this is Broadcom, I think. This is relative strength 102. Came down here. You're holding so far. You're holding this 50-day moving average. Momentum is hanging above the 40 level. There's some selling over here. Obviously, you can see that on here. I would hold this right now. If it breaks below this 100-day moving average, I may change my opinion on that. But as long as it's outperforming the S&P 500, it's at 102, so it's outperforming S&P by 2%. Watch that on the if it breaks below, like say 99 or 98, and it breaks the sell stop on the second opinion, I'd fold it. But for right now, I'm going to hold it until I see that happen. Okay, CGNX. Again, all these chip stocks, they all went down together, but they all bounced at the same time, which is good. If you just had one or two of them bouncing, that would be a little bit of a problem. So I'm going to say I'd like to see this get it back above the 50-day moving average. With CGNX, it's got a relative strength on this move of 1.09, so it's outperforming the S&P by 9%. So what's going to make? I would hold on to this right now. If the relative strength falls below 1, and then takes out that sell stop, I'm out. But for right now, I would hold this and see if we can get a little bit more of a bounce. Again, we want to keep an eye on that Philadelphia Semiconductor Index, because if it gets down much below 1220, and we're 1238 right now, that means that you're probably going to have some more selling, at least down to the 100-day moving average. So for right now, I'm going to hold it until we see what's going to happen with that. The next one is Apple, AAPL. Okay, we have Apple. This is another. I would hold on to this one still. Came down. You didn't even come down to the 50-day moving average. Relative strength is at 1.06, so you're outperforming the market. You had a nice little bit of a pullback down here, and you also have the 30-day stochastic. Looks like it's getting ready to head back up. I might even, if I were wanting to get into Apple, I might consider even buying Apple at this stage. So I'm a hold to a buy on Apple. Facebook. Again, you're trying to bounce back on here. Facebook, to me, is just one of those that you probably just hold on to forever. We have still under accumulation. A little bit. You came down here to almost about 30, kind of bounced back. I'm not sure that I'm a hold on Facebook in here. I'm not a new buyer, mainly because the momentum seems to be. I want to buy something that has positive momentum. And the relative strength on Facebook right now is 0.99. If you're just trading the thing, since you're underperforming the S&P 500, if it breaks below 176, then you may, if on a short-term trade, you might want to take a profit if you buy some over here and you're looking to get out. Otherwise, I'd hold on to this. But this is getting close to where you. If you're just trading, you may want to consider maybe selling some covered calls or something like that if you want to hold on to it long term. PayPal, PYPL. PayPal, we're outperforming the S&P by 8%. This is a long. You came down here and tested the the 50-day moving average, held on to it. You bounced off of that. Accumulation looks good. You're getting ready to cross back above 50 on the 30-day stochastic. I could even see if you haven't bought PayPal and you're thinking of going into it, this might be an opportunity to buy half a position. And if it comes back down in here and we still have a long on it, maybe you could add to it. But this is also a hold'em. SQ Square. It's had a nice little bit of a pullback over here. Didn't even make it down to the 50-day. It's been marching up again. You didn't quite get down to the 20 on the 30-day stochastic. You're kind of turning around on your momentum on your 14-day RSI over here. Got down to the 40 and bounced off of that. This parabolic movement here was really overbought. So you're getting to the point over here where if it keeps going sideways for a little bit, I'd hold on to it right in here now. Maybe even look to add to the position somewhere here on Square. Next one here is JD. I think this is JD.com. This is a Japanese or Chinese internet stock. This one actually looks like it had put in a double bottom over here. Well, you had a rough time here for some of these Chinese internet stocks, but you have a double bottom on here. You bounced off that, you came down, tested it again, and now you're up here challenging this 200-day and the 50-day. You're underperforming the S&P 500 by 5%. However, if we get up here to this 39 area, I'm a buyer of JD. I think you can work your way higher at that point. So if you're long in here, if you've bought this in here, I'm holding it, and I'm actually looking to buy on JD. All right, next one was Sony, SNE. I think they got one of these new gaming things coming out here. Sony is, hold on one second here. Okay, Sony's a long. I like this in here. This is a hold'em. I think you could probably on any pull back down this gap area here down 43, you could buy Sony again. What you want to watch if you're just trading it, right at this 50-day moving average is where it gapped up back here. I guess around earnings on good volume. You kind of watch that. If you can get down here and it holds this level, I would buy it right there. If it breaks below that 50-day, that means you're probably going to come down here and maybe test this, fill this gap. But for right now, it doesn't look like it's going to fill the gap, and I think you're starting to see a little bit. I think you could, again, look at this accumulation down here. That looks good. They're buying that. I think Sony, that doesn't fill this gap. I think it comes down here to this support around 44 and turns back up. All right, XME. One of the metals and mining ETF. Let's see here. Okay, this is surprisingly starting to move up. I think part of this is mainly because we looked at the materials sector. A lot of the metals in this we're going to start to see as the economy gets stronger, especially also with the infrastructure spending that's supposed to come due in January. They're starting to announce that you're getting good positive above 80, which makes it a buy for me over here. Positive momentum. I hold this and I buy this. This isn't. Some people look at this and they think of gold and silver. Silver a little bit, but silver's made in a lot of chips and stuff like that. So I think the XME, the mining stocks, you could buy as part of the materials sector. Okay, let me take a look here real quick. See if we have any more coming in here. Okay. Let's see. KBE, KBR, WYNN. Okay, got a whole bunch of them here. Yes. Okay, let me jump back here. Okay, we got that KBE. Let's look at that. Okay, this is S&P Bank ETF. I'm more familiar with KRE on this thing, but you want to have exposure to the banks. You've had an awful nice move up here from September. when things started to kick in again and start talking about the tax cuts, we got this. We're going to get another rate hike today. This would be a fine. I would be probably be a buyer of this, just because you want to have exposure to the financials, whether it be insurance, regional banks, money center banks, broker dealers. We like those. So I'll hold this to a buy. Wynn, W-Y-N-N. Okay, I'm assuming this is a resort. Okay, I'm assuming this is the casino stock. Wynn looks good to me. Again, this is one that I'm a holder to a buy. I think the casinos are actually one of the stronger industry groups right now. But we've been over here. If you like this, where you cross above 50 over here, you were looking to buy, and once you came over above 80, that was confirmation. This trend was going to stay for a while. You gapped up. You kind of came down a little bit. You may have a little bit of a pullback if in here, but I would be a buyer of this on any weakness. I do like the casinos overall also. Okay, next one's ASXS. ASXS. I don't see that. It's not followed on here. I'm not sure why not. So we have, let's see if we've got any more. Question, XVI, direction support, XVI. And, okay, my portfolio is 75% cash right now. Shall we proceed? I go bullish for buying anything. I buy and sell solely, second thing, upgrades and downgrades. You know what, it's hard to say. I'm not buying anything new. Shane, just start with the negative CTI. You had the weakness in the Russell, and you had the weakness in the Nasdaq. Seasonally, I think you go sideways to up in here, but I would probably, look. I'm on the sidelines myself because historically the CTI has had a pretty good track record, and I'd rather just maybe wait a little bit. Everything's moved almost in a parabolic fashion here, lately. So that's why I'm not going to chase anything in here. A couple of the ones that we looked at today that have pulled back, maybe something like that. But anything that's pushing out the new highs, I'm probably not going to go with that. So let me look at a couple of these things over here. One was XVI. I guess that's one of the volatility ones. It's not on here for some reason. Okay, let's look at ASYS. Then we're going to have to wrap it up here pretty soon. Okay, this is Amtech Systems. I would imagine this is a high-tech thing. Came down to the 200-day. Let's see. Yeah, I'm going to fold them on this. I don't like this, even though it's oversold a little bit. I'm not going to step in on this thing. If I own this and I've held it for this pullback in here, I'm going to sell any kind of a little bit of a bounce in here. I don't know what it's. You're kind of bouncing off of this thing, but I don't like it. I think there's other places to go. Your relative strength on this thing is all the way down to 0.78. So you're underperforming the market by 22%. So no, I don't like this stock. This is a fold for me. Okay, I think that's about all we have time for today. Again, with the market just going up every day, it's hard to just come in here and get something new every day. But I did want to show you that sector rotation model that Sam Stovall did. I think that's something you should make a copy of. And every once in a while, again, you just see what sectors are outperforming, which ones are underperforming, and then try to line up where they are on that, where the market top, market bottoms are. It'll help you see whether or not we're getting close to a top. In this case, I don't think we're near the top in here, even if we get like a little bit of a 3 or 4% pullback in January or something if people delay selling stocks for next year and then they take profits then, that would be something that might pull it back a little bit, but I would be a buyer at that stage, and I think next year we should have a pretty good year. Okay, I'm going to wrap it up with that. I appreciate you taking time out of your busy day to join me. I hope you got something out of this today. This will probably be back up in about an hour or so, and I will talk to you next week.